I genuinely believe that this is the easiest strategy, especially if you are starting out or you feel like this is so complicated. In this video, I am going to break down the 3-day process and how you can use it to identify high quality setups. If you are new to the channel, subscribe. Let's do this. All right. Monday is where everything begins. So this is the theory behind this strategy. Think of a candle. Think of just any candle. A candle usually has an open, a close, a high, and a low. We are interested in the high and the low. Now, if you think about it, the high and the low is your range. And what you want to do is just plot a line that touches the high and the low of that candle. Now, here's the thing. Markets do three things. The market will either break out and continue in the direction of the breakout, or the markets can break out and reverse, or the market can break out and then just stay within a trading range. And this can happen even to the downside. So, if you know this, then it's very easy for you to start predicting the market, because remember, your goal is to just predict one candle. So if the next candle closes bullish and closes as a breakout, so we have closed above the previous candle's high, this is telling you that we have strong bullish momentum. Meaning there is a very high probability that the next candle can continue in the direction of the trend. It's as simple as that. Now, what we are interested in is when price breaks out but then closes back inside of the range. So that is what you get. You get a pin and a candle that looks like that. Then our theory is price are not strong enough to close above the high. So there's a very high probability that this is a weakness, and the next candle we can see that weakness continuing, and thus that becomes a reversal setup. Now you can see this is what we call a morning star setup, and yes, it's a morning star, and if I'm wrong, please comment. Give me a comment. But the goal is for us to predict this one candle and then get in as price is going in the direction that we have predicted. Now, let's look at some real life examples of how this actually sets up. So we can just pick any pair. Let's look at CADJPY last week and see what has happened. Now, if we start on Monday, now, before you continue, if you're using TradingView, go to settings and then go to events, then go to session breaks and check that box. That way, you can see where the days are starting and ending. So we know where Monday starts and where Monday ends. This is very important because you need an accurate high and an accurate low. Now, this is Monday. Monday starts here, closes here. On Monday, we do nothing. We just wait. On Tuesday, on the other hand, price breaks out, but then closes back inside of the range. So if we were just to delete everything up to here and look at this on a daily perspective, you would see what I just described. We have a high, we have a low, and then the candle breaks out but closes back inside of the range. Same thing. So there's a very high probability that the next candle is going to be bullish. In fact, what happened? Boom, the next candle was bullish. So your goal is to get in when prices are down here. Get in when price is down here, and then you want to exit when price is up here. It's as simple as that, nothing complicated. So how exactly are you supposed to catch a trade when it's down there? Because remember, you're not sure if price is going up. At some point, this was a bearish candle. All right, so let's look at a live trade we took on Thursday on Euro JPY. And I'll show you the process that we follow to identify the trade. So if we delete everything and we start on Monday, we have Monday giving us this high. So this candle is Monday and that low. Then Tuesday breaks out, closes outside of the range, closes as a breakout, which is a very, very strong signal that price could continue in the direction of the trend. All right. On Wednesday, however, price broke out, closed back inside of the range, which is a reversal signal because this is what we call a failed breakout or CRT, whatever you want to call it. Now, the task at hand is now on Thursday. See, we have no price action on Thursday. But the goal is to catch the move on Thursday when prices are at the low, and then we exit when prices are at the high. So how do we exactly do this? So first things first, this candle now sets the new low of the week, like that. So this is the high of the week, this is the low of the week. And in definition, the high of the week is the highest point price has reached in that week, and the lowest point price has reached in that week is the low of the week. Now we can go to the 15-minute time frame or even the 5-minute, because we already know we want to see reversal. We want to see bullish move. So how do we do this? So that would be on Thursday. So let's play it all on Thursday. So on Thursday, what's the process that we follow? So everything happens either at the high of the week or the low of the week. So we are going to draw a box at the low of the week, and we shall wait for price to come back to this low of the week and do what? Trigger liquidity. So we want to get in trades that have other time frame traders in the market with big players that can give us a high risk to a low risk, high reward. All right. Next thing is we have to wait for the correct time. Now, for Asia, if you want to trade Asia, the correct time to use this strategy is between 9 and 11 p.m. Yes, 9 and 11 p.m. And then London is between 3 and 5 a.m. And then New York is between 9 and 11 a.m. All this is New York time. And you can change that on your trading view down here. And then go to UTC -4, which is New York. So let's play it up to New York session, which is 9. So, all right, it's 3. So notice when price comes back to the low of the week, triggers liquidity, we have a move. All right, now that's 9. Let's go to the 5-minute. So remember, we've not done anything yet. We've just drawn the high and the low of the week, and we've waited for price to come back to that low. All right, now once we have cleared liquidity at the low of the week in our timing window, then we draw levels. And a level is just the most recent area where price was bouncing off of on a horizontal line. Because if you look at price action currently, what we see is just we have this low, price continues higher. We don't have an area where price is consolidating. But a few minutes later, we have this consolidation here. So we draw our line up there and our line down there. So this is an area of consolidation. And our thinking is, this is even before price has continued. This is when price was doing this. We have price, we want to see price break out and close above our level. Once price closes above our level, we can get in. Then we can put our stop loss below the breakout candle, and then we can target a 1:5. Now, it's very important for you to think ahead in terms of where will I exit. So we have 3 exit criteria, and this is before even the price has triggered our entry. We have the first exit, which is our stop loss. So if we are wrong, if price comes below the breakout candle, we are wrong. We want to get in and price shoots in the direction of the predicted market, whatever. Number 2 is we can get out at a 1:5. So that is full TP. Now, the only time we can start moving our stop loss and trail is when price breaks above 1:3. So that we can exit with at least a 2.5 R. And then if price just stays, it's not moving anywhere, we can exit at the close of the day, which is at about 5 a.m. which is about 5 p.m. New York time. So what happens? So price breaks out. So once price breaks out, that's your entry, stop loss below your breakout candle, and then you let the market do its thing. So price will go do whatever. And if it does not hit your TP or 1:3, your next exit is at the close of that candle. Simple as that. So basically, if you use the failed breakout, which is Monday, Tuesday, Wednesday, it's the 3-day cycle, or Wednesday, Thursday, Friday, or Thursday, Friday, Monday. It doesn't matter. So long as you understand that 3-day cycle, then it's very easy for you to come to the market and look for a repeatable setup every single day, and then just pick the trades that follow your trading plan from step 1 to the last step. That is how you come to the screen and murder the market every single day. If you'd like to work one-on-one with me to learn this strategy, then make sure you book the call with me, link in the description. And then we have a school community where we have a free course explaining this strategy. So check out that, and if you got value from today's video, subscribe, and I will see you in the next video. Peace out.